FXN Trading Group, welcome back to ForexU. And in this lesson, we're going to be discussing uh, exit strategies. So it's widely known in the trading industry, in the trading markets, that the way you exit a trade is far more important than the way you enter a trade. Now, many experienced traders have proven this through testing the markets. So having a solid exit strategy as part of your overall trading strategy is one of the key factors that will determine how profitable you're going to be as a trader. Okay, so with that said, let's go ahead and discuss some common methods for exiting a trade, and we'll go over maybe 3 or 4 of them here. And at the end, I hope you can pick just whichever one fits your style and is easy for you to understand and follow. Okay. All right. So we'll go ahead and start with the first one here. And the first one is called a fixed profit target. Okay, so the fixed profit target method is where you decide exactly where you'll exit the trade before you actually even enter the trade. So this method allows you to essentially decide on a risk to reward ratio for your strategy. Okay, so I'm going to show you an example of what that'll look like. So that way you'll see exactly how this would work for you. Okay. So let's just say that on this chart here, let's say we're going to go short on pound USD. And let's just say that we're going to go short here once we clear all of this consolidation here, right? Now, if we go short here, of course, our stop loss has to be above the nearest high, and that would be here, okay? So now, where do we exit this particular trade? Okay. Now with this fixed profit targets, you want to target at least 1.5 to 2 risk reward ratio. Okay. So 1.5 to 1 or 2 to 1 risk reward ratio should be the goal when you're using this exit strategy. Okay, so let me show you what that would look like here. So if you're using TradingView as your trading platform, for charting at least, this is a great tool to have because it automatically has it here for you. So you click on here, this little icon here, and then you click short position. And then you're going to click where you want to enter the trade, which will be here. And then you'll see this will come up. Essentially, you can adjust where your stop loss is going to be. And let's just say we'll put it right here. And then you'll see that as you're moving this down, these numbers here are changing. And this tells you exactly what risk to reward ratio you're going to have on that trade. Okay, so let's just say that you're first aiming for 1.5 to 1 risk reward ratio. Well, that right there is essentially what your trade would look like, right? So you gotta get a preview of what your trade looks like already before you even take the trade. Okay. Now let's just say that you wanted to go for a 2 to 1 risk reward. So all you have to do is just lower this to 2 right here, 2. Now you're getting a 2 to 1. So now essentially you're risking 27 pips, as it says up here, to gain 53 pips. Okay. If you're going for a 1.5, then you're moving it back up to a 1.5, and now you're still risking 27 pips, but you're risking 27 to gain 40.7 pips, almost 41 pips. Okay, does that make sense? So what are some of the pros to using this? So one of the pros that you have to use is you have a clear idea of what your profit is going to be for every single trade that you take. There's no discretion involved. You can work in any market condition, and this pretty much works with most strategies out there that you're using. Okay, so this is a very good exit strategy to use, because if you're correct, if you're correct with your entry and how you see the market going, this is how your trade is going to look like. Okay, and so this gives you already a pre-assessment of what it looks like when you take your trade. Okay, so that is just a simple example of the fixed profit target exit strategy. Okay, and again, you can use it and you can change it. You can play around with it if you want to. You can make it a 3-to-1 risk reward ratio. I mean, it's pretty simple, to use. You'll see it as the longer you go, the more profits you'll take in here. And then you'll see here on the left side, on the right side here, these numbers in red, this in gray, and this in green. This is your entry, your stop loss, and your take profit. Okay, so pretty cool to be able to see, to get that info there as well. Okay, so this is a real easy way, real clean way to get your risk to reward ratio correct. Make sure you're not risking more than what you could actually earn, right? So let's say if you didn't have that tool and you're like, you know what, I want to go short. Let's just say I want to go short here. I want to go short here. Well, my stop loss will be here, and then if I look to the left, here's some problems here. I'm gonna go ahead and take profit here, right? So if you do that, if you do it like that without having that tool or that fix, you have to calculate everything, right, in your head, and you're like, am I getting a 1-to-1 risk reward here or not? I don't know. Well, if you have this tool here, you can just simply put it on, and it'll tell you whether or not you're getting a 1-to-1 risk reward or what it is that you're getting. So right here in that example trade, you're actually risking 32 pips, almost 33 pips, to gain only 24.6 pips. So now you're thinking, now this makes you think, is this worth getting into? If you cannot get at least a 1.5 to 1 risk reward ratio, I don't think it's probably worth taking the trade for you. And this system allows you to get out, to not get into bad trades. Okay, so this tries to keep you safe from getting into bad trades. All right, so that's just a quick example of how I could help you avoid getting into some bad trades. All right, so the next method that I have here is called the moving average close. So the moving average close method is where you use a low period EMA and you exit the trade when price closes back across that EMA. Okay, so as far as the EMAs goes, you can use either 10, 20, something like that of an EMA. Okay, and EMA is the exponential moving average. So for example, let's just say 10 for example. Okay, so we'll use 10 in this example, and I'll show you different ones so you can kind of see how it would have translated for you. Okay, so let's just say that same scenario, you're selling the market here, your stop loss is up here, and then essentially with this EMA method, you're basically waiting for price to come up and close above the EMA line, because we know that once price is moving below the EMA, it's typically a sell. But if it closes above and it comes across the EMA, then at that point is when we would want to exit the trade. So in this example here, potentially you could have gotten out here, or you definitely would have gotten out here. Okay, so that is another exit strategy that you can use to help guide you in getting out of a trade. Okay, as soon as it closes above, you're just out of the trade. As soon as it closes here, you'd be out of the trade. This one, I don't think you'd be out of the trade on this one because it didn't fully close above it. So definitely you would have been out of the trade potentially here, or definitely for sure here. Okay. So what does this allow you to do? This basically allows you to keep going for much longer chunks of the actual trade, right? So where on the other one, you would have basically, you would have gotten out potentially here or here, depending on what was a 1-to-1 or 1-to-1.5 or 2-to-1, right? This just basically allows you to ride price action as far down as you can until price comes across that line and closes. Now, this being a 10 EMA, it runs pretty close to price. Okay, if you want to give yourself a little bit more room, what you can do is you can change that to 50. And now you're going to be able to pick up a lot more of the actual trade, a lot bigger chunks, right? So in this example here, you'd be picking up this entire chunk here, and here's where you would actually get out at, right? So all this is profit, okay, compared to just getting this as profit from the other EMA, right? So using around a 50 EMA will allow you to just get more of the profits, basically. Okay, just more of the profits, and then you'll be able to exit out as soon as it closes above. So in this candle here, this would have been the candle that you would have gotten out of the trade. Okay, so that is the second method that you can use as an exit strategy. Okay, now the next one, the last one that I'm going to show you here, it's pretty simple. Okay, and this is a method where essentially, let's look at the same example as you get into a trade at a sell, your stop loss is here, right? And essentially what you would do is, after being in profit for, once you're in profit 30 pips, so once you're in profit 30 pips, what you're going to do, so let's just say that this is, let's just say this is 30 pips here, okay? So let's say price is here, you're in profit 30 pips. What you're going to do next is you're going to go ahead and you're going to take your stop loss and you're going to move it. You're going to move it to break even. So this becomes your stop loss now, and it's protecting your entry, right? What's the reasoning behind this? Well, now this is basically, now becomes a risk-free trade where no matter if price comes down, right? Let's say price is here. Let's say price comes back up and it takes you out, right? It's not going to take you out for a loss, right? It'll take you out for a break even. Okay, so no harm, no foul. You don't lose any money or anything like that. Okay, but what this does allow you to do is, if you're correct, this allows you to gain the entire part of the move. Okay, because what you'll do is, once you start moving, once price starts moving, let's say to another 30 pips, So let's say price is down here now, okay? So you're down here now, and you're in profit, let's say 60 pips, okay? What you're gonna do is you're gonna go ahead and you're gonna move your stop loss down to the 30 pip profit, okay? So now you're basically trailing your stop loss is essentially what you're doing, but you're manually doing in increments of about 30 to 30 pips or so. Okay. So as price keeps moving down, you keep moving your stop loss down to protect your profit, right? So you keep moving it down, you keep moving it down. You keep doing this until price comes up and takes you out. Okay, so price takes you out here and you're out of the trade. Okay, so that would be a third exit strategy. Okay, and on your trading platforms, you can use a trailing stop. You can set a trailing stop, which will basically do the exact same thing. So just keep that in mind as well. This is just a little bit different because you're going based off of a certain pip percentage and you're manually moving it down. So if you're the type of trader that does not have time to do that, then you could just turn on trailing stop on your platform for when you're trading, and it'll do the exact same thing for you. You can set it to 20, 30, 40 pips, and every time that it moves, it'll move your trailing stop. The stop will move with you, and you're just basically protecting what you already gained as profit. Is all you're doing. You just keep moving it down, keep moving it down, keep moving it down, and all you're doing is literally just going to protect your profit is what you're doing. Okay, so those are three simple and very good exit strategies that you can use when you're trading the market to be as profitable as possible. Okay, choose the best one that fits you, that you find the simplest one, and use it, and that way you become the best possible trader you can be. All right, until next time, guys, we'll see you in the next lesson.
Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.